So there you go. Sure as death and taxes, it's another weekly recap. Saturday morning actually. Man, I'm just trying to keep up, but I sometimes I confusing myself as well. No, but this time around is Saturday. We are back to the usual schedule because I had a few things to do. I'm gonna be busy on Sunday, so I got it back to Saturday morning. Now, a few informations before we go ahead, so that people can decide whether they're gonna go ahead or not. I try to fix the volumes. Um, we'll see. It should be a little bit less of a noise in the background this time around, I hope. Although no guarantees, of course. And the second one is for those which are a little bit worried, for good reasons, that the fact that I talk too much, which is totally true. You can't deny that. But the first part of the video, I hope it's going to be the first 15, 20 minutes. We are going to review the charts as usual. And then I took a little bit of time to read around, to look around, because I wanted to see what might happen after the recent events, starting, with past Saturday, with the assassination attempt and whatnot. I'm not really interested in all the quote unquote conspiracy theories and whatnot. I was just trying to look at what the landscape might be in macro if, as it seems for now, Donald Trump is going to win. Okay. But it's going to be a little bit more of a longer and articulated talk. So if you don't want to stick around for that, which at the end of the day, it is related to market. We are just trying to assess what are the things about politics and policies proposals, and try to fit them in what could be the macro outlook. But if you're just interested in the charts, first part of the video, as soon as we transition into the other topic, you might just cut the video and go enjoy your weekend. So after these short disclaimer, let's look at the charts and let's start out with Bitcoin. I had a very interesting conversation, I say, and it was on Tuesday. Basically, we were discussing Bitcoin here, what's going to happen from now, and my answer was particularly simple. My good buddy here, Comet Prophet, I don't know. The fact is that Discord Discord allows you to have different nicknames for different servers. So I'm getting confused with the name as well. I never remember which one was the original name and which one is the name which the user actually picked for the specific server. But anyway, we were discussing Bitcoin, as you can see, and to me it was as simple as that. And we are gonna expand this chart a little bit right now here, and it was like this. Look, we were looking, if you remember last week recap, we were looking at these level right here, one, and the other one is two, as potential resistance. And I was like, I'm interested in seeing now what type of reaction we are going to see if and when these levels are retested, because after this fail at new lows, this continuation attempt, which was rejected, you should expect a retest of these levels, and then we'll see. We actually saw that price just busted on through. We reclaimed the entire fractal right in here, and so at the point of at the moment of the screenshot, it was Tuesday morning for me, so I guess Monday night for people in the US. There are 6 hours difference, so I was like, okay, it is really common when you see a fractal like this, which is completely smashed and price is just reverting like this, even taking out the high, which is responsible, the strong high, which is responsible for the run down, that you see a little bit of a stitch up in the opposite direction. So I was looking at this level in particular. It was the nearest to current price action. And I saw, you know what, it might be that it's going to be a little bit choppy around this level. It's going to retest a little bit deeper around this level, and then it's going to come back, retest the area overall, and then it makes up its mind and it's going to go higher through this level, which I thought it was the first trouble area, let's say, if you want to be long on this retest to confirm the flip. And basically what happened, it was just that. Does it make me a better analyst or trader? No, we were just assessing price action and discussing probabilities. Isn't as a matter of fact that I actually don't even trade Bitcoin these days, but I just keep following it. So again, you see that on this spike right in here, we tested deeper into the fractal, which was flipped recently. Not really to that level, but around it, close enough, might be close enough. And then we bounced back higher. Then we came back, retesting the upper boundary of the fractal, same as this squiggly line in here, and we went higher into this level. Now, the week, of course, closed, so we don't know if the rest of the prediction is going to be true or not. But I was expecting at least a little bit of a resistance in here. I mean, there was a good amount of volume put in before the breakdown in this area, so my expectations were basically I don't expect price to completely shoot through the entire region right now. It might be that we slowly chewing through it, and ultimately we target the highs at this level. Uh, I don't know. The opposite case, of course, was this is just a secondary peak up, and we're gonna break down again. And if you see price actually moving too deep and starting to break down below the fractal, which is always the same, that was the kind of the focus of the entire analysis, right? At that point, it's very likely we're going to go for new lows. It wasn't the more probable scenario at that point, considering how price moved in this segment. But when you formulate an hypothesis or a bias, you always need to account for the opposite case in order to know when you're wrong and when your idea is negated, invalidated, and whatnot. So this is Bitcoin. It's gonna be interesting. And wink, wink, not, not. I just saw that just to a little bit of anticipation. I saw Trump being massively bullish on Bitcoin. I mean, he made a speech and he said something along the lines of, "I'm gonna protect your Bitcoiners. I'm gonna fight for your right to self-custody. I'm not gonna let all these central bankers to strip you from your right to be the owner of your quote unquote money or assets, should I say?" And I think the last part was crazy. Like I'll make so that we are never gonna have a CBDC. Okay. I mean, okay, Paul, if you think you can you can pull it off, I mean, go for it. I would be nothing but happy if we avoid the eventuality of a CBDC. Do I think he's going to be successful at it? Maybe. For now, I'd say no, but who knows? A man can hope, right? So enough for Bitcoin. Let's move on to gold. And again, gold, we started to formulate these bias to the upside, I guess, in the first video I recorded. Of course, then I published all the first three together, but was 4 weeks ago, I guess, and we were looking at these behavior right here, these ranging behavior, and then price shoot it higher, and we were looking at these, trying to find the similarities with these in the overall context of an uptrend for gold. And it looks like eventually gold actually went for a little bit of a sneak peek above range high. We almost traded to the first relevant level out of the range, but it was quickly faded. Now, this is not uncommon behavior, especially if you see something which is very efficiently and very orderly going up in price. It's actually even better if you're a long-term believer or in the asset. So usually you see price tends to gravitate back toward the last high pre-breakout, because some people might say by basic dynamics of support and resistance, you might say, okay, this was resistance, and now price is above it. It should test in here and going higher. Well, not really. Uh, it's much more common the price actually squeeze below the very obvious level and gets back to the last accumulation. Basically, is drawing back completely to get back to base and pick up the core of liquidity and maybe trying for another attempt afterwards. Now, I'd say up until the point we are above this fractal right in here, okay, that should be all well and good, and especially up until the point we are above the EQ. If you see it breaking through at that point, there have been many pickups in this region, so we might see it going for the range low, or since we got a deviation, remembering my good German friend, could it be a mirror trade to the other side for the same type of level, considering the deviation higher here? Maybe, maybe not. But my standard goal for now, up until they hold this level, and especially the EQ of the range, is that it is going to trade higher. So this position for next week should be neutral in case you want to account for a little bit of a choppiness around these levels. Uh, but neutral slash bullish. Okay, so that's gold. Now, oil. Finally, the market, which I was saying threw me off the most because I couldn't really make a case for it. It was looking like I had this idea that it had to pull back a little bit, and it never did. And finally, especially with Friday close, particularly sharp leg down on Friday. Now, again, everything comes down to these. I've showed this chart many times in the past videos, the break evens, the 10 and the 5. And while oil was going up, the break evens, as you can see in here, they never seem to catch up or to follow along. So I was expecting a little bit of a pullback in oil. Now, should this be a complete reversal? I I don't think so. For those which actually watched and maybe remember the first video that I recorded on oil, I was saying, and I quote myself again, to me, for now, the fair price, the fair value for oil should be in the mid 70s. So, and I think I literally said 76, 77. We are now down to 78.60. So another case in which close enough is close enough. Could we trade a little bit lower, opening up the week next week? Maybe. I mean, when you have such sharp down moves on Friday, they tend to have a little bit of a carry on in Monday, at least usually. And then throughout the week, maybe Tuesday, Wednesday, the market will be able to put together a bounce. What's interesting, to be fair, is that if you look at this segment right in here, basically from this point to this point, it doesn't need to be exact, of course. It's just to give a little bit of a context, right? You have what could be defined as a very extended deviation to the downside right in here. And then you have again the good old mirror trade to the other side right in here. And now we are back in what could be resemble the EQ of the range. We are just in the middle. That's why price stopped. So what's next? I don't know. Uh, it could stay in the range for a little bit. We might test it a little bit toward the range low, then it bounces back up, comes back to AQ, and maybe we test the highs, right? But I guess what I would expect, unless there is some huge and big development, I would expect oil now to be relatively stable for the next week, getting into the end of the month. I don't expect it to break down to the lows once again. At least not in the short term, not in the next week, at the very least. And at the same time, I'm not expecting it to bounce in a very strong way and getting back above the highs in here. So I would be neutral on oil for now. And that's basically my disposition for now on oil. Let's have a look at the treasuries. So, so the TLT actually made that bounce, didn't make new highs, but the other two they actually did. So the medium term duration and especially the short end of the curve or the duration actually was more dynamic to the upside. There was much more conviction in here. Might also be again if you try to because I don't have a picture of it, and nor did I open the Fred database this morning. So if you can picture the yield, which should be like saying at these charts, but inverted, you should kind of figure that the rates at the short end of the curve are going down faster than at the long end. So again, still this process of an inversion and this bull steepener still in progress. It's not completed yet. And as I said in the last video, it's gonna be sloppy. As the inversion was sloppy, the uninversion might be sloppy, and it could take another several weeks, if not months. So just don't jump the gun with it because you never know, right? Let's have a look at currencies a little bit. So again, the dollar just ranging behavior, which is reflected in the others, the euro and the pound. I was expecting a little bit of a deeper test toward the Q. We came near to it, and then Thursday and Friday bounced back up. Um, for now, I'm not expecting the DXY to really bounce hard from here. I'm not expecting to see it um, 105 next week. We might test around 104 and something above this, in this pocket right in here, maybe to just fill the void, if you want to call it that, fill the inefficient, the weak leg down, maybe. Although you might argue we didn't in here, so who knows, right? But considering the other two, conversely, the pound and the euro, they have a pretty good run up. It wouldn't be uncommon to see them drawing back a little bit, and therefore the dollar conversely should just trade a little bit higher, drawing back a little bit. Now, the yen was interesting. It looks like after spending a little bit more of a time above the 160 level, it came back down sharply. And what do you make of it? Um, Look, I think on one side it was a matter of positioning, right? Uh, Probably there were many people long the yen. We are just having one of the few pullbacks that you might see in an uptrend. Um, and I was reading about the BOJ trying to step in once again, another intervention to kind of protect the 160 level. So could it be a combination of the two, right? The market was already trying to pull back a little bit, and then you got the BOJ intervening on top of it, and it creates a very sharp move to the downside. Yeah, it could be. I I honestly don't know. To me, as for now, if you strip away everything else, it's still looking like a decent uptrend, and I would expect a little bit of a consolidation slash trading higher for next week. Not a massive amount, maybe, but at least an attempt of extended bounce in here. Now, if it is a BOJ intervention, I would just point out the last time they did was in here when the JPY first tried to breach the 160 level. And I think on the top of my head, they spent like 63, 65 billions in order to protect the yen. And what they did was actually buying in what 12 bars, so that would be 12 days. But you can see that after 2 weeks, the yen was basically at the same levels and actually traded higher. So I think, as usual, I think this is one part of my beliefs that I'm I'm hardly going to change. But I think, even if the central bank is stepping in, they can't fight gravity. And again, gravity in this metaphor is always the market. Market is always right. The central bank can influence it in the short term, but as you've seen before, give it 2 weeks, a month at the very top, and the market was higher again. So could this be we see a little bit of the same dynamic in here playing out? Well, that should be linked to the Dixie bouncing higher in here, but as I said, I'm not expecting to get back above 105 all in one blow. So I think currencies, by the nature of them, they should be trading relatively orderly for next week. I don't see any major catalyst. We've seen the ECB actually kept rates steady. They didn't drop, they didn't hike, they just they didn't change anything. So I I don't see a fundamental catalyst for now for currencies to have such a strong move one way or the other. So if anything, the majors will draw back, the Dixie will draw back in the opposite direction, and that's it. Now, the main topic, of course, given everything which is going on in markets and how people are start to freak out, is of course, talking about indices. Now, I don't remember the chart. Let's look at this one. No, what was it? Oh, this one. Okay. So here we got the Russell 2000, the Dow, of course, and the S&P and Nasdaq futures. So looking at them again, we are still observing this phenomenon of rotation. Rotation. Everyone is talking about rotation now, which, okay, okay. As a matter of fact, they have a point. And I thought, especially when we were coming out the end of the quarter, I was thinking the same. It's just a little bit of a rotation, a portfolio rebalancing and whatnot. But I mean, then you see the Russell going. I don't know because I didn't draw them, but I can't imagine how many standard deviations it might be from moving averages. Maybe, I don't know, three, maybe. It is a very sharp move to the upside. So the other two, NQ is without a shadow of a doubt the weaker here, followed by ES, and they both took out the 20 days moving average now. So might be we just started that 5-10% correction that was vastly anticipated, which, at the end of the day, if you remember back in April, in the context of a bull market, having a 5 to 10% correction, especially throughout the summer, where a lot of people are going on vacation, there are, the books are a little bit less heavy, it might be that you have a bit of a weakness in markets. Um, One thing, and now for those which are worried about me talking too long, because I'm seeing we are already at 23 minutes. Now we are going to transition from charts alone to the topics about policies, politics, Trump, and whatnot. So if you want to just pause the video or stop watching it completely, I'll give you the last chart that I usually use, which is this one about the ETFs for the Qs and the spider. And even in here, we can notice that actually the Qs gap down and they immediately closed below the 20-day moving average. The SPY actually, yeah, it gapped down. It had this day where it was looking like maybe a bounce attempt on the moving average, but then, on Friday it just went down. Look, moving averages, they're not really the holy grail, okay? They're just a tool. They're useful to grasp the general trend of the market and the strength of the trend in the market, because of course the more space you see from the moving average is the strongest is the trend, or at least people think it is, right? Like this. I mean, I could argue the good old saying, the farther it goes, the weaker it gets, blah, blah, blah. But in the common belief, the more price is going up, the more these moving averages are upward sloped, and the more delta, the more spread you get in between them, the strongest the trend. But it is a moving what average, so it implies that price has to trade above and below it. Otherwise, how can it be an average, right? So when you got these deviations so far from these averages, by the nature of mean reversion, it's natural the price will have to come down and spend a little bit of a time below the average. Okay, so let's try to focus for a minute. I'm not completely discarding the moving average. Absolutely, I mean they are very useful, especially if you're looking at such higher time frames, right? But let's focus a little bit on the structural nature of the market right now. Yes, well, SPY in this case, I'd say it is still a support for now. The Qs are weaker, of course, but they got a little bit of anticipated support below. Uh, could be a little bit of some sort of a quote unquote penetration below the 50-day moving averages and finding support in here, maybe. Uh, but if you remember the first video, I was looking at this area for the Qs, and I say I would be a buyer in this region right here, right into this gap with this point of release. Now, of course, back then the moving averages weren't what they are right now, but if it chops around a little bit and it gives time to the 100-day moving average to catch up to this level, well, at that point you might have a little bit of a good opportunity for a long, because not only you got structural confluences, but the market is not only made up by humans. There are algorithms, there are CTAs and whatnot, and whether you believe it or not, they are gonna try to make things to buy and sell around these moving averages, just because such is the way they're programmed to. Now, in this case, it might be, say the 20 days, right? You might be the fast algorithms that now are on the sell side because we broke below the moving averages. We open and close below the moving averages. So next time we get back to test it, it might be that these algorithms are now switched to the selling routines and programs. And that's how you got the dynamic of moving average, which is broken, retested, and it goes down. Could this be? Maybe. But zooming out, we had periods where these markets were actually trading below the averages and reaccumulated around the 100-day. So the bottom line is, it is all said and done. I I'm still hesitant to call it. Okay, so to me, we are still in the overall context of an uptrend, and nothing is lost for now if you want to be a long-term bull. Okay, now with that, let's try to get in the other topic. So I gave you a decent warning. If you don't want to listen to it, just go fuck yourself. And pardon my French, but really, people say, "Oh, you talk so much." Well, just don't listen. I'm not paid to talk. You're not paid to listen. So it's just for the sake of it, right? At the end of the day, I'm not getting out shit for these videos I do and the hour I spend doing it. But to me, it's just fun. Uh, and I don't really care if I got 3 views or 100 views. It doesn't really mean shit. I do it because I don't have anything better to do on a Saturday morning. But anyway, if we look at what is going on with these, so the rotation from the big the mega cups into the small cups, and we start to incorporate what happened recently with um, First we got the debate, and I guess at that point it was clear that one of the two men on stage was mentally incapable. I'm gonna let you guess which one. And then you have these assassination attempt and whatnot. Again, I don't want to get into the details of it. The web is full of videos which are actually talking about this and that. It was staged, it was not staged, it was the deep state. Uh, it was Biden trying to take out the competition. It was the same Republican Party trying to take out Trump because they don't want him to run because they prefer maybe Mickey Haley or whoever. I don't know. I don't have any chance to know it. What I do know and what I could might try to build up a case for could be that whether you like it or not, or whether you believe this or that, I think not only by looking at the polls right now, but I think if there was, in my view at least, if there was a strong argument for Trump to be the winner of these elections, just because the competition was dealing with dementia at that point, now after these assassination attempt which went south, and the the mediatic attention it got and the symbolism behind it. That picture about Trump with his fist up in the air, and on this background you got this American flag. It, it is just something which is very iconic. And uh, after the first few days, like Monday, Tuesday, and all the memes and the fun and whatnot, I started to think, this might be serious. I mean, this could be one of those moments which it's going to be in the history book. Our children will study, will read about what happened last week in the history books at school 30, 40 years from now. Now, which are the implications of this? Nobody can say. It might be something which is to unfold itself in the next 15, 20, 30 years. Who knows? But I guess you can't deny that the impact he's going to have on the U.S. domestic policy and also foreign policy is going to be huge. And since the market are actually trying to to place bets and to assess what, as I was saying, what the regulatory framework will be, what the legislation will be, and which sector of the economy and the market it might favor or not favor. When you see something like this, with the tech sector being the one which is suffering the most, the small caps and the industrial sector actually having a little bit of an erection right here, and the S&P overall staying relatively stable, there are. I think the first thing you could say is if you want to support the bull case for the S&P as a proxy for the overall equity market in the US. One of the main arguments for the perma bulls was, yeah, this market is going up, but if you look at the breadth of the market, is narrower and narrower by the week and by the day. Okay. Now, with the small and mid caps going up so far, and the S&P staying relatively resilient, you might say, okay, now the market is still in a bullish enough posture, and the breadth is actually widen up now because you got more stocks participating in the rally. So, that could be an argument to keep on being bullish if you want to be bullish. All right. The counter argument might be one dynamic that we've always seen in cryptos, right? In cryptos, you got Bitcoin going up, putting in high, and then you got all the shit which is rallying, all the shit coin you can think of, the new issue, the new created shit coin going up like 10, 20x, and then historically that was the end of the party. There was that old saying goes like the shit always rallies last. So might be if you want to be bearish, right? That would be some sort of a case you can build up. But I was looking at what, which are the the, the proposal that Trump is trying to bring on as for the policies he would like to implement. And I was actually taking note here because I can't really remember everything. And I was looking for articles and whatnot. I tried to take on information from many different angles because I don't want to read only stuff which are oriented one way or the other from a political standpoint. But after reading 7, 8 articles from different sources, I narrow it down these few points. So, what should be the program in terms of policies? Should be tariffs, lower interest rates, um, lower taxation, especially for corporations, right? He was talking about tax cut and a 15% flat type of taxation for U.S. corporation, right? And then there was the foreign policy, and that was particularly, I mean, interesting. I guess it is the right terminology because I don't want to say strange, I don't want to say frightening, I don't want to say worrying because at the end of the day, it is hard to judge. It was interesting, but he actually said, especially when it comes down to Taiwan, right? He said, uh, should we really take care of Taiwan right now? And by the way, I'm gonna get rid of the charts right now. You can't just listen to me as long as I talk about these. We are gonna get back to the chart maybe later on, but for now, if you wanna roam around the house, or if you've got something to do, you can just listen to it. So, do we really need to take care of Taiwan? Do we really feel the need to protect them? Why? Why should we? And it was something like, if you think about when he said, referring to Putin, well, Putin should really attack those countries which didn't pay their NATO contributions for the defense of the Atlantic Alliance. And now he's saying something like, why should we defend Taiwan? They basically dumped on us economically, especially when it comes down to the semiconductor sector, because they were able to do it at such lower price, such in a such cheaper manner that everyone started to outsource the production of microprocessor chips, semiconductors to Taiwan. The TSMC is one of the main semiconductors manufacturing there in Taiwan. And he said, so they basically took out a hell of a lot of money from us, and it never came to their mind that they should spend a little bit on defense, especially with the geopolitical climate they have. So why, after losing these economic advantage in this sector, should we also deploy money to go there and defend them? Now, the counter argument might be, as I heard, okay, but you need to bear in mind that they are also producing the chips that you put in your jet fighters, right? I mean, isn't it some sort of a military secret or a strategic asset, something along those lines? Yeah, maybe, maybe not. But it looks like he's having a little bit, again, this is America first. Now, okay, so we might be cooperative with other people around the globe, but as long as our people are taken care of first. And, you know, when you start to look at it, and then you look at the tech sector, just imagine the Qs, imagine NQ futures. Why should they go down? Hmm. If you're not interested in defending Taiwan, that means that China could lay his hands on Taiwan and the manufacturing, semiconductors manufacturing, so the US corporations are not going to be able to acquire chips at such lower costs. And what they're going to do, are they going to re-onshore production of semiconductors? Yeah, but this is going to cost, because starting out with the cost of labor in the US, you can't compare it with the cost of labor in Asia, right? So therefore, that should add up to the cost and expenses component of the balance sheet here in the US. Well, here, there in the US. What happens to revenues and to earnings if you increase the costs? Revenues overall should go down, should be shrinking, right? So if revenues and earnings actually start to decrease, what happens to price to earning evaluation? Should go down. Therefore, the value of the stock should go down. Therefore, the stock should be repriced lower. So could it be that just on the rumors of these intended policy, a few people here and there are starting to unload a little bit of their holdings in Google, Nvidia, or whatnot? Could it be? I, I think it is a legit question to ask. Now, of course, you can also say, well, isn't it that sometimes when you got something which just went up for such a long period of time, is it isn't it good at a point to take some profits and actually make some realized gains? Yeah, absolutely. But if you start to combine all together, because on the other side of the coin, you have small caps and industrial sector going up, as in the sector which were counting of importing chips at a very cheap price is going down. But at the same time, you see this rotation in the industrial sector in the US because are we thinking we are going to re-onshore production? Therefore, you're going to see a boost in the domestic industrial sector. So it's a little bit tied together, right? But I mean, what do you think? I'm just, thinking out loud, which is why I warn people if you don't want to hear it, just don't. So that was the first one. Then there was the tariffs and lowering interest rates and the tax cut. Now, to me, those three together, tariffs, lower interest rates, and a much more friendly and dovish fiscal type of policy in terms of taxation, it starts to resemble a little bit of a protectionism, right? Which would fall in line with the America First theme, right? America First, so we need to favor our own industries and corporations instead of the other abroad, right? But, how do you do that? Well, bringing down interest rates would, of course, give a little bit of a fresh air, especially to all these companies which are going to face in 2025, most likely, this refinancing wall because they got debt which was taken on when interest rates were basically around zero, 0.5%, 50 basis point maybe, which for them, then in the actual credit market could have been equal to 1.5% type of a loan, mortgage, financing, whatnot. It's very hard to roll over that debt if now interest rates, Fed fund is a 5.25, 5.50 something. So that would mean that now you have to refinance not anymore at 1.5%, but at what, 7, 8, 9%? That would erode in a significant way the the profit margins of these companies, if not, let alone just make them unable to refinance and therefore defaulting. So I see the point in, if you want to defend the sector, the industrial sector, and the corporations here onshore, doing something like it might be a right path. But although I don't think unless something huge in markets really happen, uh, I don't see how you can start to cut in September because if you look at the CME futures, that they are pricing in an above 90% possibility that we are going to see cuts in September. I don't see how you can bring down rates so fast to allow this company in 2025 to refinance at a rate which is comparable to what they were paying 3, 4, 5 years ago. Even if the Fed starts to cut 50 basis point every single meeting, do, well, do you think we're gonna be back to 2%, 1.5% over the next 6, 7 months? I don't know. I mean, it seems unlikely again, unless something really big happens and they need to cut aggressively maybe even 100 basis point at a time if shit is really hitting the fan. But if shit is really hitting the fan, I guess the refinancing wall in the next 9 months is going to be the last of the problems for these companies because shit is happening right here, right now, not in the next 9 months, right? So that was the first consideration. The second one, of course, tax cuts. Yeah, I mean, cut the taxes, you increase the bottom line for these companies, and maybe you hope that since the margins are going up, the profit margins are going up because they pay less in taxes, they're gonna invest, hire more people, making new investments, expanding their businesses. Uh, Maybe, but that you know that raises a problem for the government. If I have less tax revenues, where I'm gonna take the difference? Oh, but it's pretty easy. Tariffs, right? We are gonna lower taxes for our own people, and to replace that income that now we lack and that now we miss, we're gonna, charge it on the foreigners, mainly China, right? Because it was talking about 60%, 100% type of tariffs on Chinese imports. I mean, I don't know. I guess this is nuts. Well, first of all, why would you think the Chinese would play ball? I do know the argument about, well, they are the major exporter and the US are the major importer, so they don't have access to a larger enough market to absorb all the supply they build up and to sustain the demand for their economic system, if not the US, because in the US the economy is 70% consumption, and 95-99% of what is consumed in the US is produced in China. So it's a good symbiosis, right? And it's not in anyone's interest to try to go there and disrupt it, right? So, second of all, even if China play balls, don't you think that overall prices will go higher for businesses in the US that, to have the same type of goods, the exporter, so in this case China, will have to pay the fee. Uh, don't you think they're going to say, you know what, if you're imposing on me this fee, in order to maintain my margins of profit, I'm just going to raise prices? So I don't really see how, no matter the claims about taking care of the American population, taking care of inflation, he said we are gonna fight to lower inflation because under Biden inflation was skyrocketing. Yeah, okay. And do you think that this combination of stuff, cutting rates, lowering taxes, and imposing tariffs, is a good way to curb inflation? Well, I'm no PhD, but I think it's not. So I don't get it. I really don't get it. And I heard um what's the VP nominee, JC, man, I just forgot. No, it wasn't Wade. It was what? Vance. That there you go, Vance. So, and I heard JD Vance actually proposing, maybe we should weaken the dollar. Hmm. Uh, how how do you weaken the dollar? Okay, you might say, well, if we drop rates, the interest rates differential rate is going down, so there will be no more so many people interested in holding US dollars because it's yielding more, and they might gonna drop the US dollar and swap back in their local currency, which should bring selling pressure on the dollar relative to other currency and weaken the dollar. Why would you weaken the dollar? Easy peasy, because it's just textbook, right? if you devalue your currency relative to others, you're going to have a little bit of an advantage when it comes down to export. It fits in well with the rest of the plan and the policies he's proposing, right? Less taxes, lower rates, so you can refinance and then everything is good for you. America first and whatnot, and we are going to weaken our currency so that not only you are going to get access to the domestic market, but you can produce and actually export to the rest of the world because now they might have a little bit more of an incentive to buy from you here in the US and paying you in dollars because our currency is going down relative to theirs. It works in practice, I guess. Sorry, it works in theory, but if you impose these tariffs on the rest of the world, would you think you're going to see more dollars getting out of the US and being spent in the rest of the world economy or less dollars? Because I would say less, right? For what we discussed before. And if you have less dollars which are going out of the US and floating to the global financial and monetary system, considering that all else being equal, the level outside of the US of dollar denominated debt, it's still the same. It's if not, we also know it went higher in recent years. How would you reconcile the fact that there is more dollar denominated debt, there is less dollars which are provided by the US to the rest of the world? Because basically what he's saying is we're going to try to decrease, if not completely revert, how our trade balance of trades, whatever. So instead of having a deficit, we might have a surplus now. Yeah, I mean, okay. So less dollars, which are provided to the rest of the world, same amount, if not more, of dollar denominated debt. What happens when that dollar denominated debt, which is not in the US, but is being created and extended out into existence in the euro dollar monetary system, what happens when that debt comes due? And these countries all around the globe, they don't have any more access to US dollars because you are basically uh, crippling global trades, or you are making them very less efficient. And therefore, the amount of, on net balance, the amount of dollars which are flowing out of the US to these countries, and they're counting on these inflows of dollars to pay down the debt they got, which is denominated in dollars, to refinance it, right? What do you think is going to happen to the dollar? Because if I need to come up and to present myself to the lender with these dollars that I borrowed, right? And now I got less dollars. They are not very easily acquired. They cannot be very easily acquired on the open market or via global trade. But would you think the demand for dollars should go up or down? And if the demand for dollars go up, why the DXY should go down? Why the dollars should go down relative to other fiat? I, I can't I can't believe that these past recent years, starting from 2020, 2021, didn't teach anyone a lesson. What happened when you shut down the economy and you basically shut down global trade? The Dixie just skyrocketed for the same exact reason. Everyone was scrambling to get dollars because dollars are what they need in order to pay down their liabilities. It's a debt-based economy. On the other, if you think about a balance sheet, on the other side of an asset, there is a liability. If that liability has been funded in the euro dollar denomination in the euro dollar market, you need dollars to sustain that liability and therefore having the asset on the other side of the balance sheet. If you don't have dollars anymore, you might say, oh, you know what, I'm going to default on the liability side. Yeah, okay, and then you're going to erase the asset on the other side. it, it doesn't work like that the way I see it. So again, uh, uh, everything we are seeing in markets, and now I just brought back in the charts, could this be a reflection of the market trying, to wrap his mind around these potential future outcomes. One thing would be, if you think that these measures, assuming they are going to be implemented, because we do know politicians, when they need to be elected, they're going to tell all these kind of fairy tales, but then when they are in office, they usually change their stand. But it, I guess if we want to believe that all these policy regime is going to be implemented, okay, and it's going to be inflationary, at least domestically for the US, because I think for the rest of the world it's going to be deflationary, right? Um, you should see the yields going up, because yields and interest rates are just a reflection of growth and inflation expectations. So if you think this whole plan Trump laid out should be good and positive for the US economy and should be inflationary, you should see yields going up. So a good thermometer of these might be looking at the yields and looking at the break-evens as as a measure of future inflation expectations. That could be a good one to try to grasp the magnitude of these policies, the impact they could have, and actually the odds the market is attributing to these policies to be actually enforced. So again, this was kind of my thought experiment. Could also look at oil now that I think of it, because if oil goes up, it is inflationary. If oil is going down, the oil market is saying, You know what, I don't see a lot of demand for oil, so price is going down. If there, why there is no demand for oil? Well, because the economy is contracting. So no growth, no inflation, none of that. So again, I know it might be boring for a few folks, but to me, it's just fucking interesting. I I confess. So I guess all in all, I managed to keep it below the 1 hour mark, and I'm gonna close it down like this. I honestly thought it would have taken me a hell of a lot more time to synthesize these thoughts I had, but fortunately for you, we made it quick. So again, after it, I'm wishing you a very good weekend, and we're gonna see what happens next trading week. As usual, have fun, be cool, and possibly be happy. It's a nice sunny day where I do live, so I'm definitely gonna be happy. I feel energized today. I don't fucking know how, but that's it. I'm gonna enjoy it until it lasts. All right. Till next time, Nils out.